You may have heard of Fibonacci numbers in elementary school, but if you're wondering how Fibonacci's apply here, you've come to the right place. In fact, with the help of Fibonacci's, if you've taken the trades that I'm going to lay out here for you, you would be up over 500% from the candidates in our power option plays, which is one of our premier options trading systems. Robert Roy here, founder of WealthBuildersHQ.com, and today we're going to discuss Fibonacci retracement lines, or Fibonacci retracement lines, why I use them and how they can give you a new trading perspective on your charts. So let's talk a little about trading and Fibonacci's. Let's talk about how we use them. I'm going to reference back to the chart a little bit, so I'll kind of flip back and forth a little bit as we're talking here, but I'm going to turn around and look at the chart behind me. You guys should be seeing it on your screen. And this is a chart of a company called Qualcomm. It really doesn't matter who it is. I just picked them as an example. They're not someone that I normally am trading. So what we've got here is this bottoming pattern. And basically what we're looking for is the largest move closest to the right side of the chart. Now there's a little bit more to it than that. For this discussion, we'll make it as basic as we can. So we're going to grab a Fibonacci tool that I have on the right-hand side here. It's called Fibonacci Support and Resistance. You'll have a similar type of tool depending on the broker that you use or the charting software that you use. They are on TOS, they are on IB, it's on TradeStation. There are plenty of firms, plenty of trading companies that have Fibonacci's as standard indicators. So we're going to grab the one that says Fibonacci Support and Resistance. If you don't see that one, ask the broker. So I'm going to click on it. You'll notice my mouse became a pencil. We're going to come from this lowest low right here of that little, what we'll call V bottom in there, that little bottoming pattern off of that swing low. And this will snap automatically to it. Now I want you to look at my mouse on the far right-hand side here. You see the pencil is at 65.31. If I move my mouse up or down, all of these levels change. And you see all I am drawing, if I drew to that point, that's not the right place, but if I drew to that point, all I did was I applied this bottom blue line and this top blue line, and everything else drew automatically. So let's take that off and let's do it again. We're going to actually come from that V bottom there up to this V top. We're blue line drawing only. It will snap into the wick off of that, and it'll snap. If you watch as I lower it down, you'll see it snap right to it. And that's on Trade Navigator, right? Which I highly recommend as a secondary charting platform. I've been using it for over 20 years. If I stopped teaching and was still only trading for myself, I would be using this platform as well. So we're going to drag it out to the right. Every one of these lines in between here are support and resistance levels. The how we use each of them comes in the training. It's a little bit more than we can actually handle in a video like this, but let's talk a little bit about what the ratios are and the ones that we really want to use. So there's some different lines on there. You'll notice the blue lines. We talked about those already. We drew from those. And then you'll see there's a purple line. And that purple line is 0.618. That's known as the golden ratio, divine proportion, the golden retreat. It is the primary Fibonacci number, the number that all of existence revolves around. Whether it's math, the human body, music, it doesn't matter. Everything in life revolves around that 0.618, right? Do some research on it. The other numbers that are in there are also fib levels, and they are called retracement levels. So we look for stocks to move within those ratios to certain levels. Some of them are more important than others. The most important is 0.618. Number two would be 0.5. If you've ever heard of a 50% retracement, if you're watching CNBC or another financial program, or some guru is talking about a 50% retracement, it is a Fibonacci number that they're referencing, whether they realize it or not. So if you look, we made this move up, and then we had a nice fail. We hesitated at this 236 level. We gapped down to the 382. We gapped down again to the 618. We didn't quite make it to the 764, which is a bit of an overextension if we do. We got back up to 618. We pushed back in these lines again, closed right at the 50, gapped up right, we gapped up above it, came right back down to the 382. I think you get the point. We play within these lines over and over and over again. So what's going on, right? Why does it work the way it does? Well, not only does it work off of the lines that I told you were particularly important, the 618 and the 50, we look for trades to be taken off of there. So as an example, you could see we made a very nice move here. We closed right down here. We opened up a little bit lower. We took a move up and a small move up the next day. And then we moved one line, 2 lines, 2.5 lines before we failed. That's pretty standard of a move. And you have to understand standard deviation to understand the why. I don't want to get into the mechanics of this is how your engine works, right? Put the key in the ignition, turn and go, which is what my students are taught to do. When power option plays, which I talked about before, they're given signals of how to take these trades, why we take these trades. We go into the discussion of the whys, but the trade setups are already there. Don't question the numbers. Don't try to recreate them. Don't make it 0.619 or 0.501 or your own Fibonacci numbers. Don't make numbers up. Use the numbers that are proven, tried and true. They're tested and they work. And how well do they work? Extremely well. So as we look at Fibonacci's and trading, look at Fibonacci's as an indicator. Right now, when you look at, for me, the indicator sets that I use, Fibonacci's are my primary indicator that I focus on. Notice there's not a whole lot more on my screen, certainly not on the top part. I'll use moving averages and some other things, but Fibonacci's are the key to what we do. And it's how I teach and trade in what we do in our power options plays, where this year I said we were up over 500%. If you took all those trades, folks, and I lay every single one of them out for you, if you took all of those trades where I told you this is what we're looking for, you would be up over $900,000 in the first 9 months of this year. Right now, would you take every trade? Probably not. But every single one of them were all laid out live on the screen. None of them were, hey, did you guys see this? We took this trade. I said, hey, on power options plays, we're gonna take this trade on Apple if it gets above 187 or down below 169, whatever the numbers are, or if it does this or does that. There's about 8 or 10 different entry signals that we take based on what we do. If you want to learn more about what I talk about in power option plays, there will be a link down below in the description you can click on. So here's the question of the day. Has this changed the way that you've thought about Fibonacci's? Let us know in the comments section below. With that, until next time, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and we'll see you in the next video. Folks, thanks for watching the video. I hope you enjoyed it. If you did, please make sure to give it a thumbs up. Go ahead and click the subscribe button so you can follow along with all of our great content, and ring the bell so you never miss anything new that comes out. And folks, with that, down below, we've got a couple of other videos for you to choose from that you can watch from our materials.